this one is similar to more like exercise 5, but hopefully you can get exercise 4 from it. But we have the following information: the gross wages, Social Security and Medicare costs, federal and state unemployment, workers' comp, etc., etc. So all of these items are related to payroll. What I personally do is make an employee and an employer column, because some of these taxes are only paid for by the employee and some of them are only paid for by the employer. So our gross wages is what the employee earned. So I have $300,000 is going to go to the employee. If you've ever earned someplace, you'll know that they take out what's called FICA. FICA is made up of Social Security and Medicare. Social Security actually pays for your retirement after you're 65, or the age has gone up now, but after you retire. And it has a cap. You quit paying Social Security taxes after you've made a certain level of income each year. And then Medicare is also a component of that. So when you see like the 7.5% or so FICA or Social Security and Medicare, it's actually made up of 2 federal programs, but they just lump it together in one withholding. So that is actually withheld from your wages and sent in for you. So I have $19,000 there. But what happens is the employer also pays an equal amount. So what happens in your account in the federal government, you have $38,000 sent in for your retirement and Medicare when you hit your old age. So if you're self-employed, you get to pay both halves because you are both the employee and the employer. But right now, know that Social Security is borne equally by the employer and the employee. So how do they pay it? The employer actually sends in $38,000, but that's because they keep it from you and send it in. Federal and state unemployment, if you think about unemployment, the employer is the one who is doing the laying off, so they pay federal and state unemployment taxes. These funds are used to pay people's unemployment if they're out of a job. So hopefully you'll never have to draw upon unemployment, but if you do, that benefit is out there for you and employers pay it. Workers' compensation insurance. Workers' compensation insurance is also paid for by the employer. That's if you get hurt at work, that insurance fund pays for that. Group health insurance. For group health insurance, you actually have to know who is actually paying for that. For group health insurance, you have to know who is actually paying for that, as well as the pension benefits. Most of the time the pension is paid for by the employer. If it's set a profit sharing or a 401k, sometimes that can be withheld from the employer's wages and the employer. So you kind of have to be told. Sometimes the employee pays a portion of the group health insurance and the employer pays the rest of it. I believe these homework assignments say that the employer pays the health insurance and the pension, although in reality you have to be told. State withholding from the employee's wages. The employee has them withheld from their wages. The idea behind that is that if you got paid, this is all the employees, but if you got paid $300,000 a year and you paid all your taxes on April 15th, people will tend to not have saved enough money and not send it in by themselves. So what happens is employers are required to take it out of your pay and send it in for you. So it's just a convenience for you. So if you look at this, we generally have 3 things withheld from our wages. And so I have my $300,000 minus the withholding amounts. So don't add them, guys, subtract them. And you can see that the net pay here is, border there, $254,500. If this was your paycheck and you got paid that much, you would be happy, but let's just say there's 10 people, so you got paid $25,450 for the year. This is what you actually get the check for. Okay, so that's important to remember. And then as far as taxes, This one is the tax, state and unemployment, and workers' compensation are all taxes. So I have those added up together. I'll just added our, and then these two, the problem tells us that they were paid for ahead of time and recorded as prepaid insurance expense. So these are, they're sitting out there, they're already paid off, but as I earn them or incur them, then it actually reduces the prepaid, which I'll show you in the journal entry. So here's my journal entry. The first one I'm going to do is for the employee wages. So I'm going to debit wages expense. Wages expense is always gross. Okay, so think of it this way. This is how much the employee earned, but this is who gets the cash. So I'm going to have a payable for each one of these things on who gets the cash. So in the first one, I'm going to have Social Security and Medicare payable. So I'm not going to retype out that whole name, but Social Security payable. The next one I'm going to have is state taxes payable. I typed them in there on pause. So notice that the wages, the gross wages, the wages expense is $300,000, but of those amounts, you're going to send in $19,000 to the Social Security Administration. You're going to send in $6,500 to the whatever state that you're located in, and you're going to send $20,000 to the federal government. The amount that the employee gets that you write the check for is $254,500. So notice the wages payable is what you write the check for to the employee. These other payables are what you write the check for to the other people. Now I have to record the employers. I'll pause it while I type in the journal. Okay, so notice the three taxes that the employer pays are the Social Security, unemployment, and workers' comp. So I'm going to have the those three add up. Goes into your expense. And Social Security payable, you're going to write a check to the Social Security Administration for $19,000. You're going to write a check to federal and state unemployment for $15,000. And notice in the problem, it says they put those into prepaid insurance because they already wrote it. Otherwise, you would put them into workers' compensation payable, except that they just tell you they did this. So that is your three taxes for your payroll tax expense. And now I'll pause. Okay, so now we have yet the $5,000 and $6,000 left to go, and group health insurance expense is $5,000. Notice if the employee had paid a portion of it, it would have just gone into this journal entry as health insurance payable over there, or prepaid health insurance payable there, and it wouldn't have affected this. So this one would still be the same. I'm still working with this column. So then I'm going to credit the prepaid health insurance. Again, you could do health insurance payable, except that this problem says, like the one in your homework, that it was taken to prepaid health insurance, so I need to take it out of prepaid. Remember, prepaid health insurance was an asset. Now I'm incurring it. I would have debited insurance expense, credited prepaid health insurance, so that's what I'm doing here. The pension expense is the $6,000, and then it's either funded or unfunded. So if it's funded, I credit cash. If it's unfunded, I credit pension liability. So hopefully you can do your homework problems.